One company that's managed to buck the economy's downward trend is Entertainment Properties Trust. The company, which buys real estate and leases it to entertainment retail centers like movie theaters and other recreational investments, posted third quarter earnings, $75 million. That's up 22% from the same time last year. And David Brain, the CEO of Entertainment Properties Trust, joins us this morning. David, earlier this week you announced third quarter earnings and your operating results were up across the board. Now, given this slumping economy, what do you attribute those strong results to?
Well, I think the company really operates a little bit outside those results. Our projects are long-term, and they've been coming over a period of time. Capital formation, we've raised over $300 million of equity throughout the year. So we've really laid in a lot of reserves. We're able to do a lot of business, and the industries we deal in are non-cyclical and, frankly, maybe even a little counter-recessionary, of going to the movies, of some of the lower-priced daily attended ski hills and public charter schools, those things we deal in. So actually the fundamentals at the tenant level are very good. The fundamentals for our projects, everything's going along very well. And yes, this is kind of in stark contrast to our stock price performance.
You know, it's interesting, though, because one of the things it seems like we're learning in the stock market is that no company is recession-proof. And I know you guys do have some exposure to casinos and other things. Is there some point where you think the economy will start to have an impact on your business?
Well, I think the more impact actually probably was last summer with gas prices and some of the things that immediately affect consumer more tangibly, more immediately, and in the day-to-day, month-to-month budget probably were more important than what's going on now. There is some effect of what's going on now, that's true. But, you know, usually when you get rather than a budget impact like the price of a gallon of gas, but you get a general pall on the economy, I think people look to escape that a little bit more, and therefore the major piece of our holdings, 55% of our holdings being in cinema, they do very, very well. And we're seeing that. In 5 out of the last 6 technical recessions, both attendance and box office went up notably.
You know, it's interesting. I was at the movie theater this weekend, and I agree with you 1,000%. Let's talk about your stock, though, for a minute. I think you closed at $34 yesterday, down from a 52-week high of $59. You already alluded to some frustration. What does a CEO do in this environment when they're really clicking on all cylinders, and yet the market's crushing their stock?
Well, I'll tell you, you try and get the word out. You try and make appearances like this, and I really appreciate being on. You try and go to investor conferences. You kind of do everything you can to make sure people understand those fundamentals are there. If there are selling pressures generally, if people needing liquidity, fund managers who have to sell your stock even though they believe in the story and they believe in the company, some of that happens. Then it's our job to look for new areas of awareness, maybe even overseas. In the most extreme examples, I think you look to move your business forward for your shareholders with a PIPE fashion, a private investment in a public company, places where you can move to get capital at reasonable prices, because that's what we are. We form capital, we put it to work for our investors, and then we get those returns back to them. So that's part of the agenda and what we need to do, and we just have to work around the obstacles that come to us.
I'm glad you mentioned PIPE investing. That's kind of complicated. We might bring you back one day to explain that to the audience. Right now, though, your company has 3 current projects that you've invested in. There's a winery in California, a casino in New York, and a water park in Kansas. Give us the status of those projects.
Well, the theater in California is completed, and so that's online. That's actually open for business for holiday season, so we're in good shape there. The water park in Kansas City is underway. It's been under construction now for about 9 months, I'd say. Has an expected opening date still for summer of '09, although I have to tell you there are bonds associated for a round of financing there in the bond market. These are tax-exempt sales tax revenue bonds, and whether they get sold in timely fashion to keep that online to make that '09 opening or that moves to 10, we'll have to see. And our project likewise up in New York, the casino-anchored project in the Catskills, has some bond financing associated with that we're trying to tell whether that can get done. There are industrial development bonds, and the functionality of that market will determine the project timing there. But the expectation is that'll be online for mid-10. But that hasn't, unlike a water park, the casino anchor project actually can open any time during the year. So that could slide months, doesn't necessarily have to slide a whole year. But they're in good shape. They're online, and the expectation for those projects is that they'll be very well attended. The consumer metrics that really underlie those projects are pretty stable in this market.